I knew at that time what finance was. I knew the breadth and depth of what it's capitalism. Like it's the skeleton of the modern world. So I have deep respect now for, okay, this is the biggest chess game. This is the biggest game of all games. This is it. So I knew that.
Welcome back, everybody, to Be the Trader. Today, I have a very special guest. You might know him as Audimal_City on Twitter. It's also known as Tim Parker. Tim, welcome to the show, my man. It's so happy to have you here. And for those who don't know who he is, don't worry. He's going to go into kind of a background what got him started, but give you a brief overview. He day trades and swing trades, both long and short. And he also has some things cooking in the works in the future for him, which I'll let him, divulge in the future for you guys. But other than that, Tim, welcome to the show, my man.
It's an honor, Alex. Thanks for having me.
Absolutely, man. So if you can get us started, get this show cooking, let us know, where did you come from? Like, how did trading kind of get into your story, if you will?
Sure. So when I graduated college, I didn't know anything about finance. I think if you had asked me at that time what the NASDAQ was, for example, it's hard to even know. I probably would have said an insurance company. I didn't have that acumen. I didn't know anything about the financial world. It was in 2008. I was selling advertising to kind of middle America, small business owners, the mom and pop shops, salt of the earth type of people, entrepreneurs, middle-sized businesses as well. And I remember I was probably 21. And it was 2008, December of 2008, I think. And I just remember I would go to these normal meetings trying to sell, $200 ad, and everyone was glued to their TV. People on all walks of life, very successful people, multimillionaires, and then people that owned a frozen yogurt shop or something like that. And everyone was glued to the TV, and the TV was saying the Dow Jones was down, tens of thousands of points. And at that time, it's amazing, even thinking back, how little, just because I grew up in the fine arts, I'd gone to college for English and music. I literally didn't even know the basic underpinnings of what was occurring. So I was really curious. I didn't know, there was so much I didn't know. I didn't know that modern, the middle life of a modern American is characterized to some extent by saving and investing for some trajectory towards retirement, towards a time that you can build wealth and preserve assets, whether generationally or multi-generationally, and you'll retire at the very least. And so I just had no idea. I was just totally confused. So I think it may have even started with a Google search. What's happening here? And so a 2-year-long education into finance started that ended in a passion.
Nice. And so when it started, you started with the Google search, you said, what did you find and how did you initially go, okay, let me open a broker account? Tell me a little bit about that story.
Tim Sykes was who I found first. I think
pretty much all of us. Yeah.
Yeah. The first vocal brander of do-it-yourself finance. Yeah. I was stubborn. So I dug in and was self-taught, for better or worse, big emphasis on the worse. So that led to trading penny stocks. I remember buying TSEM, Tower Semiconductor. It's an Israeli company. I remember putting $2,000 into it, and that $2,000 stake went down to $500. And I remember being excited because obviously my $2,000 was still $2,000. It was just that the company's perceived worth had gone down by 75%. So I was like, I'll put another 2,000 in on my phone.
You're okay.
Did that just, okay, cool. My phone gave me a message. And so I was super excited. And so I doubled down or tripled down, whatever that is, and lost that initial stake. So it just led to buying cheap companies, as I think with a lot of people. It led to buying cheap companies because everything goes up, stocks go up, and the cheaper the company, the bigger the upside.
And so you say you started off just buying stocks, penny stocks, but how did you, what happened next? Did you just immediately you said at the beginning, emphasis on the worst, right? For better, for worse, teaching yourself. Why did you say that? What happened how long did it take you to find what worked for you? And how long was that journey? Was it years, quick couple of months? Give us an idea of that.
So 4 years, I'd say. So from 2009 to 2013 was my journey of hemorrhaging money, essentially. Yep. Absolutely no idea what I was doing, holding and hoping, no edge, no discerning acumen, no ability to play at the table with any players. Slowly, and I can barely remember it, somewhere with 2010, 2011, I had a very lucrative sales job. So I knew at that time what finance was. I knew the breadth and depth of what it's capitalism. Like it's the skeleton of the modern world. So I had a deep respect now for, okay, this is the biggest chess game. This is the biggest game of all games. This is it. So I knew that. Still didn't really know what I was doing. I remember using a lot of moving averages, like a pullback to a moving average. I had a lucrative sales job at that time, low six-figure job, working my butt off, cold calling, and started stacking a little money. And part and parcel with stacking money, I started to take money seriously, because it was one thing to have $2,000, whatever, because of a bonus check and throw that at the market. But all of a sudden, one day I was looking at 30 grand in a taxable account. And so now it's time to make a run, like make a play for it, which is not saying I was winning money hand over fist. But I just started to kind of, professionalism is what I always call it. Professionalism. You sit down, this is a craft. Athletes, chess players, soldiers, they go to work professionally. They do something with peers that are doing the same thing in high stakes in some cases. There's a peer reviewed methodology for doing things. There's a natural outworking of dedicated effort, and you do something, you contribute something. So I went from degeneracy, gambling, where I feel like a lot of the Wall Street bet types people are now, which is, it's a gamified, weird, chaotic, like it's just a free for all. And so I was like, okay, this is actually something I have to grind out. So I started very, very slowly to do that in the mornings before work.
Nice. And that's what I'm about to say. I mean, you're working and trying to figure this out. And it's very similar. I think a lot of people can relate to you right now. They start off kind of gambling, just throwing money in, just hoping that it's going to work. And it took me quite a few years to understand it's not that quick. And it took you the same. I'm curious, though, when you start to get more professional about it, because you said it's more of professionalism that you start to look at it. Can you explain what that change in your process from before you did that to you're like, okay, this is a professional opportunity for me. I need to focus on this with that mindset. What did you change?
Yeah, it's a great question. And the answer is coming up in my 3-day workshop in Vegas. No, I'm kidding. Because there's just so much to talk about on that. Two things. One is preparation. So preparing for the next day instead of just sort of, or the next week, whatever it is, whatever time frame you're trading, instead of more or less just winging it spontaneously, which I think sounds ridiculous to say, but if you actually scrutinize a lot of traders' processes, you may find more of that spontaneity than we can comfortably believe. And also reviewing my results. So reviewing my ledger or my results as compared to perhaps a gambler. A gambler goes into a casino in search of a cocktail of stimuli, including big highs and deep lows. And there's no need to review the results that you achieve at the roulette table because they're predictably consistent. You just give money away that you could have spent on your family for your recreational addiction or whatever it is. So I started to ask myself earnestly the question, how am I different from that? What separates me from that? What discernible metric, what actual thing I can point to says, I'm not just doing that? And of course, in the early parts of this search, there's not so much. And then as you've found, little bits and pieces start to emerge. Oh, here's how I'm different. Here's how I'm doing something that has some longevity, some durability. Here's how I'm doing something that could be something called a career. And so I would start to review that and literally just in the simplest way, write down strengths and weaknesses, what was working, what wasn't, and then just start to, and at this time I was doing it in a very poor way, but I would just start to focus all of my attention on the things that were working over and over and over again.
It's interesting. I mean, you said when you were starting off, you kind of did it in a poor way. And I think we all do, right? But at least you made an effort and made a change in how you reviewed and how you analyzed yourself. But you also mentioned the whole idea of looking back at all the trades you've done. And when you did that, give us an idea, because there's so many people who ask these questions of like, how do I know what works for me? So how did you discern like a good set? I mean, especially when you're new, right? How did you discern like what worked for you? versus
So
luck, right?
yeah, unfortunately at that time, I don't think I was able to discern that. Yeah. And that's a big thing that factors into trading on all stages. Even now, look at the Bill Wang, the Archegos. So it's a really important thing. I wrote an ebook once and I was saying sometimes I'm spinning the wheel of fortune and money's coming out and I'm smiling and I don't know it's because I'm a brilliant speculator or simply because that wheel is just still spinning. So I think it's an important thing to acknowledge and sort of sincerely just accept the possibility that some part of this, even for the greatest of the great, is luck and fortune. I think that's a material reality of this gig. Which is not to say I think my edge is in any way reliant on luck, but we need not to get under the shadow of that vanity that none of it is, that none of it's luck. So I didn't know what was luck or not then. Back then, I matched the lifestyle I had, which was 2 hours in the morning before I went to work, and asset classes. So something like an option that I could swing trade and could could materially inflate if I got the trade right, and defined risk on the downside. So I just made really basic mix and match assignments with what was going on in my life. I knew I couldn't day trade. I knew I couldn't scalp. I couldn't even check my phone in the job I had. So I just tried to match the parts of my trading that allowed, like, if I was going to have any chance of success, those avenues.
Where did those ideas come from then? I'm very curious. Was it just like, did you read something? I know we mentioned at the beginning how you discovered trading was Tim Sykes. I mean, I discovered it as well because he's a great marketer and it's everywhere. So I'm just curious, like, did you learn anything from like just books or maybe a mentor? Maybe you just kind of trial and error and said, you know what, I think this is a good idea. Can you give an idea of that? Because there's a lot of people in your shoes, not right now, but in your shoes back then, right now.
I had a mess of technical indicators on my screens, mostly Fibonacci and moving averages. And I bought calls and things that were down a lot. Because I knew some basic through my self study in finance that was catalyzed about what we talked about earlier. I knew certain facts about the asset class of stocks. Most sharp moves in stocks that go down are sentiment driven and very transient. Ultimately, they make new all-time highs. Sometimes we get a bear market, which is associated with an economic recession, and that's usually a 1 to 2, 3 year process. But most times stocks go, whether it's in a certain sector or in a certain style, like value or growth, like what we've seen lately with value, that was years long, but characterized by sharp corrections. Most of the time, those are fleeting, like the COVID correction. Q1 2020, S&P is down 36%, peak to trough, quarter over quarter. That's exogenous. That's from something going on out in the world. Are the underlying economic conditions, are the underlying fundamental realities of the world changing? Of course, you could argue, yes, someone had a grandparent die of COVID. It's a human tragedy. The market isn't really about human tragedy so much. Market was up big in the year of World War II, where a lot of people died. Tsunamis hit Japan or Indonesia. There's a lot of really tragic stuff that happens on a human reality. But the market's job is it's a pricing mechanism. So we're all very concerned about these human realities because we're human, but the market's not human. It's a voting machine and a pricing machine. So it's pricing these things in. So it's not to say that COVID is not a big deal. Obviously, it's totally changed the texture of human life, but 36% down in a raging bull market and a secular bull market coming out of the March 9th, 2009 lows. Anyway, that's just an example of what I'm talking about. Is that's a buy. That's a buy. Like that just is. If you spend 2 hours studying a chart of the Dow for the last 100 years, you'll see this wasn't a recession. Like GDP and corporate earnings, corporate fundamentals, especially in places like Europe that aren't at all-time highs. They're still climbing this sort of wall of worry. So to answer your question, that's what I was doing back then. I would just see something. My big bet was EWZ. I don't remember if the Portuguese ETF or the Italian ETF. It was in the sovereign debt crisis. I think this was 2010 or something. And there was a European country whose ETF was down like 40% because people thought maybe it was Greece or EWP. Spain's going out of business. Like that's what they thought. Like it's the end of the world for Spain. Spain's just not going to be a thing. And that's always wrong. It's always wrong. That line of thinking. 2008 was a recession. 2000 was a recession. 1990 was a recession. 1987 recession. So on. There are recessions, but 19 times out of 20, that headline is a buy. That's all I was doing. Something would go down and down and down, and I would look at it and I would just buy calls with my whole account.
And so I like that you also said that because you were working. And so that you found what worked for you, and that was swing trading. And that's what you started to focus on. Now walk us down, go a little further down the line. When was it that you were like, you know what? How many years from then where you're like, you know what? I can do this. I don't need to be at this corporate job. I can go and do my own thing. How long did that take from there?
So yeah, I hate the big-headed part of this because it gets borderline narcissistic and stuff to talk about these big wins and stuff. But 2013 was a year where I was doing well at my sales job, but I had made, low seven figures I remember by my birthday in March, in 2013, way more than I had made in my job. And I remember thinking, as it's totally natural to think, and you just look back and you're like, you're a kid. I'm a kid at that time. I'm 23 or something. And I thought, oh, well, I'm God's gift to money management. I'm clearly, I'm that, I'm that Warren Buffett, that junior, and so I'm good. I don't need this. Like, I'm a different class of person. I'm very special. And I've come through the enormous curriculum of adulthood to realize that none of us are special. It's both the beauty and the beauty. It's a bad thing, but also a beautiful, good thing about the trading journey is we're not special. We're all dealing with the same things. We're not either especially advantaged or especially cursed or disadvantaged. It's a beautiful, liberating thing. But at that time I thought, okay, the world's dealing with, something real special here. So I quit my job, I think July of 2013.
And then at that moment, were you only swing trading up to then? And then you started to day trade at that moment?
Correct.
Was it pretty easy to transition to day trading for you, or was it kind of a shocker? Tell me about that.
Well, I lost $1 million I'd made in the next 4 months. So, okay. No, I would say not easy.
Yeah. Was that because of day trading, or is that because your swing trading strategy wasn't working either? Or?
I had gone to largely day trading, but I was still doing the swings that I was doing. So I wouldn't attribute so much to style drift, if you will, and just more to the thing I was doing before was luck, and I just found out later. Okay.
So talk to me real quick. Talk to the person who's just hearing this, and maybe, we don't know, but maybe they have a really good strategy and they're doing phenomenal in 2020, or maybe it was luck. But how, anything you can tell someone, since you've experienced that. So explain what to look out for, or if there's anything you can or be aware of.
Yeah. So the most important thing, this is so crucial, is sustain your edge through, or what you think is your edge, through multiple market cycles. The market's job, and we could go into why this is and so forth, but it doesn't truly matter. The market's job is to produce edges and then launder them out. That's its job. It'll put a bait out, to put a little piece of food. Think about what we're doing when we bait a fish. Put out a little piece of food and to return more food. That's the market's job for whatever reason. So that's why you have market conditions, whether it's decade-long shifts like between value and growth recently, or multi-week shifts, like the constant shift recently between small caps, small caps, the dominance of small caps, the resurgence of small caps, and interest rate sensitive instruments versus big cap tech and so forth. It's like a week over week over week game of, what's the game? What's the game where they're pulling on
flow or tug of war?
Tug of war, exactly. So whatever it is, sustain your edge or carry your edge through different market conditions and find out, A, if it's durable through different market conditions, or at least B, if you can adjust it for different market conditions. Because that's the thing. If you can do that, I would say everyone in the world, if you can prove that you can do that, your journey as a trader has begun, and now really get to work. Now really consider quitting your job. Now really, I love trading, and I'm a big proponent of it. And I think anyone can do it. I'm a huge skeptic of the whole 95% of traders fail, which we can talk about. It's just kind of a BS metric to me. But if you haven't done that, you're not really a trader. Adaptive is this key word I always go back to. So you just have to realize that the market's job is to dangle out something in front of you, make you think you've got it all figured out, increase your bet size, and then take it all back or more.
So basically, it's literally probably you're talking to everyone out there right now, because I went through this like ridiculous for like 2.5 years straight, where it's just like you'll think you got it and then boom, you think you got it and then boom. And it's because like maybe you size up, like you said, everything looks easy, you start to size up and then it's kind of gone for a while. And you brought up the word adaptation. A lot of traders can sense some things, right? Over time, you get better at it. We were talking about this earlier off the film before we start recording, how we were just talking about trading. I was like, yeah, it's just changing. The market's changing again. How long do you think it takes for a trader to really sense, like, number one, sense something's changing, and number two, be able to make a change?
I would say that's highly dependent on the individual market participant, but to honor the great question without a everything's individual kind of cop out answer, I would say years. Just to honor the question with a usable answer, I would say it's. I mean, I know there's a trader that I consider a personal friend, even though we haven't talked in a long time, that started full time at the same time as me. He's younger than me. That's ultra high net worth now, 60, 70 plus, which I'm not even, and not like a Rain Man type, like some brilliant quant, just like me. And here I am kind of trottling along in my pace, my rhythm. I'm very grateful. I'm at a wonderful place with my trading. I'm very happy, and then you might find a trader that started at the same time as me and that's even smarter than me or more gifted than me and maybe, blew up or something. So it's luck's involved. And, for the most part though, yeah, go ahead.
I love that you said that answer. The first answer, it does depend per person. But I like that you're trying to justify, or at least answer the question, but it made me think of what's that differentiator then? Because you mentioned the three different traders, you, your friend, and then some other guy who might be that brilliant, but blows up.
Yeah. I mean, we could write a book, let's write a book. Let's take some time off and write a book, man. Cause you're asking the same question of, that's the question of human life. Like what's the difference between, I mean, we have examples in organisms of true brilliance. Like someone's brain is different, neuroanatomically different. LeBron James is anatomically and neuroanatomically different. You can point to that empirically, but there's also just a lot of people that are normal. They're not outliers in terms of something you can actually observe, and they're just it's right thinking, man. It's the observation, collection, and adherence to right tenets. You enter into a craft, whether it's welding or soccer or whatever it is, and you observe correctly, empirically, without bias. You input information, even if it's hard to hear, in the correct way. You integrate it without traumatic response, without emotional reactivity. You make tenets, you make a ledger of tenets, things that have found to be true. You put them down, you organize them so they can be remembered, and you adhere to them. That's the key thing, is everybody knows the way. No one walks the way. Everyone knows it. Everyone knows the way. It's a simple process. It's almost so simple it doesn't even bear articulate. It's almost so simple it seems complex, I guess, is why we think we need a book on it. Enter the field, eyes open, curious, abdicate bias, stay open, focused, a lot of hard work, collect tenets and axioms about the craft, write them down, organize them, remember them. It's a huge thing. People don't do that. Find a way not to get bored. Find a way to avoid the tedium it takes to do something excellently for more than 7 days, like bodybuilding or whatever else. Yeah. Look at Arnold Schwarzenegger. It's like genetic freak, or he just found a way to get past, to find ecstasy in the tedium that happens inevitably week 6 of anything.
Yep.
So it's this boringly predictable process of just finding out true things and finding a way to live aligned with them.
First off, I love that answer. I think if anyone's listening to this, rewind and just listen to that whole answer, because that's 100% and just nailed it. So I appreciate that, Tim. And I want to know, go back a little. Let's go back to what we were talking about. How you started to day trade after you left your job. You kind of lost that million within a couple of weeks, or 6 weeks. Would you say 6 weeks or 4 months? It's
It was,
okay.
I think it was 4 months that
Okay.
I had lost it. Yeah.
So when did you kind of get it? Like how long did it take you to kind of get it? And what was it that helped you? And I'm sure it wasn't just one thing, maybe it was, but what was it that was kind of holding you back to get it too?
The thing that was holding me back was I know what the market's going to do. I know what the market's going to do. I was trading for big home run trades. I would trade big consolidations looking for this home run move. I didn't really understand the underlying mechanics and now I think compellingly go into that sort of thing. So I was trading home runs and I knew for a fact, I know what the market will do, which of course leads to big conviction. It's called conviction, leads to big winners when you're right. And we know what happens with conviction when we're not right.
Gotcha.
So that was the story of my trading, is big winners, big losers. But you string 3 of those big losers together, you go through a lose.
Sorry, everyone. I lost Tim here for just a second, but he'll be right back. His phone just dropped service, but he'll be right back. Sorry about that, guys. We had a little connection issues there, but no worries. We're back. Real quick, Tim, I wanted to get back on what we were talking about earlier, and that was on what was, I know you're kind of answering already, so you may re-answer it, and that's okay, but I want to get more into the fact of what was that thing that was kind of holding you back, and how did you overcome it?
So yeah, just a certainty that I knew how a certain set of market conditions would unfold. I mean, I truly knew what the market would do. And some of that was my background in history as a boy wonderkind, as I saw it, or something in markets, which is just wretchedly incorrect. So I knew when I was going into a trade, I knew what the outcome would be. I was shocked and surprised by losses.
And you were mentioning earlier that because you were shocked and surprised, or because you had that confidence, you would have big wins or big losses. So ultimately, did you just pretty much say, you know what, I don't know what the market's going to do, and you just pretty much transition to what?
I don't know what the market's going to do.
Gotcha. And did you
still know that?
Yeah. And what do you say to people who are like, hey, you know what, Tim, I have an edge right now. I'm killing it. And I know every time I see this setup, it's going to work. Like it's like an 80% chance I'm going to win. Here's the data, Tim. I got it. Like, this is good to go. I'm going to go full time tomorrow. And I've been trading for 2 years.
That could be valid. I mean, that could be very valid. If this trader was asking me my opinion, let's just see the data. Let's just look at the data. But that could be edge is edge, man. So, 2 years is enough. If that was true, 80% of the time, this particular setup emerges, this set of things is done. I might ask this trader, do you think you know what the market's going to do? And if they said yes, that's deeply problematic. And I would ask them what in their data set compelled them to believe such an enormously tragic and wrong thing. But what the hypothesis that you confronted me with is that could be very valid. I would be excited for that trader. That 2 years of testing an edge with an 80%, whatever you didn't specify, sure, but win rate or expectancy rate, sounds like the start. That could be very, very valid.
Now, if you make it a year, does it change anything?
It depends on what they're trading. So if you're trading like the small cap momentum world and so forth, I would say no. I would say a year is long enough. Because again, the numbers you're talking, I would say that person probably has the beginning of what can be called a sustained edge. I think it gets a lot more complicated in quote unquote my world, the big board and futures world, which is mostly of what I trade, where these seasons can last, a long time. And there are countless examples, including billionaires, people who have made fortunes, like Vic Niederhofer and many, many others. We had a recent example, Bill Wang, where a regime can change so callously and swiftly that even the apex predator is brought to their knees. But if you're trading kind of momentum, kind of that lower tier of stocks, not in terms of quality, but just the lower price stocks, trading the momentum world, kind of that Momo world. I think that there are certainly seasons and stuff with that, but I mean, I traded those when I was starting in 2010, and I traded them full time, day trading them in 2013. And sometimes I still look at them every day. It's kind of mostly the same stuff. It's a lot of the same players, a lot of the same manipulation. I mean, level 2 is a thing, price and volume. I mean,
interesting. No, that's cool. I love it because I had no idea. Half the time I'm just talking to you, right? I'm just asking questions. I love it. I threw that at you, and you being honest. I mean, that does sound like it could be close to an edge that you can sustain. And I love that you said that. Now, a couple of things before we start to wrap this up, though. I wanted to find out if you personally could go back in time and sit down with yourself and say, look, Tim, you need to do this. And what would you tell yourself right before you actually started to dive into trading? Like before you placed your first trade, you already knew that you wanted to try it, but right before you did it, what would you like to tell yourself?
You're not special. You're not special, Tim. So we live in this, I don't know what generation I am, man. I don't know. I'm early 30s. I'm older than a millennial, I think. I don't even know. I don't keep track, but everyone under the age of 40, Alex, has been conditioned to believe. It's the premise of advertising. It's the premise of consumer culture. It's the premise of modernity. It's the premise of, look around. It's the premise of this world. It's the premise of Western culture. You are special and so am I. It's the premise of morality these days. It's the premise of identity. You're special. And so when we scrutinize that from a trading perspective, we find out a few things. And so I would offer myself, and your viewership, of course, is what I'm doing with this synthetically, but certainly I would go back to myself and I'd say, Tim, I'm going to give you a fact. And the fact at first, I'm going to slap you across the face with it. And then I'm going to caress you with it. Same fact. First, it's going to be a blow, and then it's going to be a gentle caress. So the blow is, we have a lot of people. We have a little team. A lot of people come in and they don't think they need to put the work in. They know what the market's going to do without putting the work in, of course. And even if they do put the work in, they still know what the market's going to do. But some of them, not on my team, but just people we've come into contact with, a lot of people just don't want to put the work in. The whole ethos of our little team is you need to put like a lot of work in. But I just find a lot of market participants, there's this thought that I don't need to work. I don't need to put the work in on this. And that can come from a lot of things. I find an example would be I was an engineer in my past career, so trading is going to be easy. It's not. I was.
Well, you mentioned your team. Like you say your team. Can you give us an idea of what you mean by that? Because and we're getting closer to the end here, where I would love for you to explain, what you mean by your team, because people are probably hearing you say that and they're like, what is he talking about? So share a little bit about like what your team is and how people can find you as well and learn more about you.
Yeah, Adaptive Analytics is the name of my team. I'm a co-founder of a little trading group called Adaptive Analytics, and it's a real small group, very dedicated and focused traders. So.
And is there a website, or just look up Adaptive Analytics or a Twitter?
AdaptiveAnalyticsTrading.com is our website. Yeah.
Perfect. And right, the only thing I want to ask you yourself, man, real quick, is just what would you say to people who are in that boom and bust cycle right now? Because I get that DM all the time, and I apologize for cutting you off there. But I get DM all the time where they're like, I keep on doing well, then completely go back. Doing well, then completely go back. And they say, well, I don't know what to do. Like any suggestions for that person?
I would just build a big set of metrics. We call them key performance metrics, just like you use in the corporate world. I would write down a set of tenets and guidelines. I would align yourself to purpose every day. What am I here for? What do I identify as? Am I here to be a professional trader, someone who has a 20-year or 30 or 40-year career? And if you do, then you need to find out some of the the metrics and some of the corners and edges of what that means, because that is going to mean different seasons. And just try to identify the boom and bust cycle is very common. It happens on all time frames of all kinds of traders, but trying to identify what goes into a boom for you, what goes into a bust. What are the market conditions that go into a boom? What are the market conditions or bust? This isn't rocket science. Like we like to pretend. I think it goes back to my "you're not special" thing. Like I think part of the reason we say 95% of traders fail is we want to believe we're doing something very special, but we're actually doing something that's like most other things. It's if you work hard and try and put a lot of time in, you will get better. You might not be Schwarzenegger or LeBron James or whoever, but you will get better. You will be able to make a living wage. So I would just say, take it seriously, write a lot of stuff down, externalize it, study it, find a way to get above the tedium and understand that your boom and bust cycles are happening for a reason. Market conditions or something going on between the ears with you. There's a reason that you boom up, blossom, and then bust down and wither. There's something going on there. It's not some cruel stroke of luck. It's not God. There's a rhythm there. And you can find out, you can examine it, you can find out what it is. So listen.
Well, thank you so much, Tim. Hey, look, man, this is so fun. A great time. I know we had a little mess up in communication with the dropout, but not a big deal. I love that I had you on the show today. You shared a lot of good insight. And I know in the future, we'll probably be bringing you back so we can dive in even deeper. But thank you so much for being here today, my man.
Absolutely. Great to spend a Friday with you. Take care, Alex.